Good morning, everybody. Welcome to the Talk With Kiet podcast, where we connect people, ideas, and capital to help make a difference in the world. Today, I have Brian Moran, the founder and CEO of FLX Networks. Brian and I will talk about his entrepreneurial journey and how to build a financial community between asset managers, wealth managers, and financial advisors. But now, before we begin, I just want to say thank you to everyone who has served our country. Your sacrifice are unparalleled and your courage is amazing. Thank you for keeping us safe, and everybody, happy Veterans Day. Brian, welcome to the podcast.
Thank you, Kit, and I echo your comments. Happy Veterans Day, and thank you for the service and all that you do as a veteran and also active duty. Appreciate you keeping us safe, as you mentioned, but also everything you've done to serve this country. We're forever in your debt, so thank you.
No, thank you. And Brian, thank you for being on today. We're going to have an exciting conversation. I was so inspired by your story, and we'll touch on the video that you did as well. But before we go on to now, talk a little bit about your history, your career journey.
So I'm happy to, and thank you again for having me. So Kit, my career has always been on the asset and wealth management. What I would say is that the ecosystem that surrounds this channel, and specifically much of my career has been focused on being on the asset management side and bringing investment capabilities to the wealth management channel and world. So over the past almost 25 years, that time has been spent in roles from sales roles to a variety of different executive leadership roles prior to launching FLX Networks.
Got it. Now, if I understood correctly, you were very senior AMG, and then all of a sudden one day said, forget about this. I'm going to leave and start something new. Like, what inspired that?
I think so. One, I was really fortunate. My career has had me take part in some incredible organizations, AMG being the company prior to being part of FLX that I had the chance to learn a tremendous amount and be around an incredible group of people. But prior to that, I had spent over a decade at Neuberger Berman, and again, around an environment and leadership figures that were, I think, very motivational and really looked at the world in different ways. And one of the things that came from both of those journeys in my career was, not getting set into the status quo and thinking and trying to challenge yourself to look outside the box and find new ways to do things. And so that feeling, that thought process was actually what led to this. In fact, I would almost say that what truly led to the founding of FLX Networks was a worry that I could potentially fail. Not a fear of failure necessarily, but a worry that I was on a path for failing. And what I mean by that is, over the past decade, asset to wealth management engagement, that distribution experience, as many people refer to it as, has changed so much. And in late 2018, I remember sitting in a meeting and we were talking about how to proceed forward with the business. And I couldn't get out of my mind that all of the things we were discussing felt like in some ways it'd be hard to get a return on investment, or frankly, that they were ambiguous or fragmented, or it was ineffective, the way that we were positioning the business for the future. And it wasn't just the company I was at. I felt like this was happening across the industry. And, that desire to want to win is really what pushed me to start thinking outside the box and think about different ways to maybe approach this industry moving forward. And that's what led to the founding of FLX Networks in December of 19, where in short, I think it was the ability to try to take things that were happening in the B2C, the business to consumer, that direct to consumer world, and begin to bring them into the B2B world, the business to business world. And that is what we've set off here to do, is to modernize and simplify the engagement experience within asset and wealth management.
Yeah. But what was amazed me is, you mentioned the story of the day you decided to do it, you made this video that you put together, and it's really about your story. Like, tell the audience about that. Like, what inspired you to put that video together, but also to to really broadcast to your personal networks that this is what you're doing?
It's starting any business, starting any new job, starting a new business, starting anything. There's always a lot of nervous energy, a lot of, in some ways there is some, scared and fear and worry and concern about, am I doing the right thing? But I knew in my heart, I truly knew that the idea I had and the idea that we could build upon could go a tremendous distance. And I was so confident in it. I wanted to film the day I truly made that decision, which was actually on September 11th, 2019, where I truly set off on my own to go do this. I took a video that day so I could record how I felt at the moment, what I thought we could accomplish as I built out the company, followed a business plan, and attracted incredible talent to join along with me. I recorded that moment. And I actually forwarded to the head of Flex Media, which is a gentleman named Matt Novello, a lifelong friend, and said, hey, can you save this moment, maybe dress it up, because I'm going to come back to you in 18 months roughly, and I'm going to say, how did we do? And how much did I get right? And how much, have we accomplished as a company? And so, yeah, it was, one of those moments, but I would encourage anybody, anytime you have a life-changing moment, record that moment, how you felt, what you were thinking, the nervousness, the excitement, record it, and go back and see how you feel 12 months later. And Kit, that was really what drove me to do it. And then when we revisited that video as a company, 15 months later, it was a powerful, powerful message to our team and our growing organization.
Now, before we touch on what you originally intended to your current experience, how was that conversation with your wife and kids to say, hey, honey, or daddy's going to do this, or honey, to your wife say, hey, spend less money, I gotta go make this happen?
Totally, yeah. It's a great question. I think it's one of those things that, in some ways, I believe that you now see why so many times entrepreneurs are either one of two sides. They're either super young, or in many cases they're super wealthy, because in between, when you're making a decision to put it all out there and put it all on the line to start something new, it's a big commitment. And especially if you have a young family and you're growing it, and it requires everybody being on the same page and being on board. And my wife honestly has been by my side on this and has been super supportive on every single step, which has been critical to us achieving the goals. And my kids, it's an awesome thing to share with your kids. Being an entrepreneur, being a leader, it's an amazing thing to step out and show your kids about taking on challenges and trying to go after things and win on your terms. You can't do it if everybody, it's really hard, I should say, to do it if you don't have everybody on the same page, rowing the boat in the same direction. So I would truly say that without them being on board, but also positioning it in a positive way, like we're on a journey here, we're doing this together, and it's going to be something special that's going to change how people think. And I really do believe that's been great for our family. So
no, that's awesome. Now, okay, so going back to, you did this video, you have this vision of starting this. Like, what was that expectation and feeling versus now you've done it? Like what would you say the difference would be in terms of, before starting journey and now you're on?
So before was, how do you get this done? Right? You have a great business plan, you have a good idea, you have lots of details behind it, but quickly, once you're into the moment, you realize, holy cow, there is so much to do. And how do I fit it all in one day? So 18-hour work days, candidly, are the norm for a long period of time. So that part in the beginning is, yes, you have a great plan. But the second part is, once you're in the moment, you have to constantly be thinking about sequence and the cadence that you're taking. Because you got to get it all done. It's just, what's the best path to getting it done? And are you prioritizing, in my opinion, the most important things to achieving the goals that you've set forth, that vision that you want to achieve? Does that make sense?
No, it does totally. And so I guess a big part of that's also assembling the right team, right? So what was some of your tricks in terms of assembling that team?
I don't want to call them tricks, but I but I think because that technically that means I'm selling them into this. But in all fairness, the best way to recruit great people is to
Yeah.
by be genuine, is to be yourself, and to actually have people believe that you think you can achieve what you've set out to do. I'm a believer more than anything, and I think COVID shows this, the environment that we're in and the environment we've been in, that leadership matters and that people want to follow something and be a part of something they can get behind and believe in. And not only that, you find people that are also students of industry. And if you look at our leadership team, I would say, I would stack it up against any in the asset management space today. It is some of the most senior operators, really experienced students of the business, and they're all driving super hard. They're really passionate about what we're doing. And we talk about this all the time. We have three key words about our culture here. It's respect, innovate, and care. And each of them, in my opinion, represents the best of our culture in those three words in everything that they do. And they got to buy into it. But it's not for everybody. What I would definitely tell you is, as a leader and as a founder, you got to make sure people are up for the challenge, because it is not easy. It is super hard. So you have to make sure that they have that DNA and truly appreciate what they're getting into, because it's much different than anything that they've probably done in their career to that point in time.
Yeah, no, totally. And and so for a company that you've started in a way, it's more of like a post-COVID company. Like how are you structuring the team and the environment differently, pre-COVID world versus post-COVID world?
Well, pre-COVID world, the world had not totally adopted within the B2B space, right? Within the manufacturer of asset manager products to the wealth manager and the financial advisors using those products, it had not completely adopted a virtual remote environment. So many of the things that you thought about early in the early days of our vision and how we were proceeding and building had to be tailored, thankfully, or altered to where the environment is today. And in today's environment, we have set the business firmly around the technology platform and the community that we have developed within the Flex network, right? So if you look at what we've built, our goal was to have a destination where asset managers, wealth managers, advisors could go to, and they could leverage our exchanges to hopefully save money, increase their productivity, and drive revenue. If those things could happen, then I thought, listen, we will drive a really very vibrant community and a very great engagement experience. But at the heart of it has to be smart technology, but you also have to have people that want to engage and be a part of that experience on their terms, where and how they want.
Yeah. But also, you started and you opened an office not in like a major city center, right?
Yeah,
You've done it in like the
totally.
burbs.
Well, it's funny you say that too, right? It's we also get asked a lot, like, well, do you have an office? Because we're only 3 years, we'll be 3 years old in December of 19,
Yeah.
or December of this year. And everyone's like, well, do you have an office? Aren't you like a technology company trying to do all these different ways of challenging the status quo? And the funny thing is, I couldn't wait to get us an office, not because I was looking to have everybody come in 5 days a week and work all the time. I wanted a place that people would be excited about coming to, right? I wanted a place that people would say, it's great to be in the office. I love seeing my peers. I love seeing the potential clients come in the door. I love actually being a part of something where we are humans at the end of the day, where there is a connection and a camaraderie. Because when it's all remote, in all fairness, sometimes, especially in startup land, and salespeople that are watching this definitely can appreciate this. When everything is remote and you never have an opportunity to engage with your peers and your colleagues, it can be a lonely place. And one of the things that gets you through are those people that you work through with every day. They're in the trenches with you, and they're working all hours of the day and night. It's great to have that bonding and that time to come together. So we couldn't wait to get in the office, but we also did it in the suburbs, which was intentional as well. One, it was obviously more cost effective for a startup, but it was also a way for us to leverage a lot of local talent that we knew would want to be in the environment we're in, out in the suburbs of northern New Jersey, and take advantage of really the flexibility that we offered.
Yeah. And you're seeing some of these suburbs evolving, right, in a big way because
Yeah. COVID, I mean, this is total sidebar. I actually think COVID,
yeah,
in many ways, I'm sure it's the same in your neighborhood, right? And the fact is, COVID probably saved a lot of the suburbs, especially in the northern New Jersey, New York metro area, can even in out to Greenwich. COVID had a tremendous impact because a lot of people fled to the suburbs, and with them, at that time, you also saw culture, restaurants, and different things come out from the cities, come out to the suburbs. And so it ended up being, and for many of the towns in northern New Jersey, a really interesting period of time. While very, hectic and chaotic and uncertain, it also ended up being a great time because a lot of things came to the suburbs. People came to the suburbs once again and wanted to be out here. And COVID, candidly, COVID was responsible for that. As much as there's nothing good associated with COVID, and I really do mean that, there are some tangible things that have occurred that have been positive developments for local communities.
yeah. So, by the way, I should have said up front, congrats on the Series A round, which is
Thank you.
amazing. But and throughout the 3 years, like, what were some of the toughest moments, or was there a moment where you say, "Yeah, I'm gonna give up. Like, this is not worth it"?
No, there's never been a moment. Well, first, every moment's tough.
Yeah,
Everything you do in starting a company, it's super tough. And I think anyone that's been in starting a business, a division of a company, even your own startup, every day is tough. So I think I would say that is the foundation of just when you're starting something, you got to be prepared for that. There's never been a moment that I would say I've said, I can't do this. We got to move. I got to stop. That's just never been there. However, have there been moments that are they're scary? Yeah. And honestly, the biggest one is that one of the first, I would say, crucible moments, those inflection points of the company, which was when COVID did hit. I mean, think about it. I launched the company December of 19, walk away from a traditional career in asset management, get a little bit of funding in that initial, or I should say fund a business myself, and then get funding from some really great investors and partners and friends. And then COVID hits. That was a moment where I would say I truly looked and said, this could actually totally spin out of control in a bad way, because you didn't know what was going to happen. And separately, at the other side of it, I also looked at it, and as I was talking to our advisory board and actual employees that we are now bringing on board and the team that we were building, we also saw it as, holy cow, this could be lightning in a bottle moment though too. So that scariness and that feeling of, oh man, what do we do? That was never more visible than that moment in that March to May period of 2020. But outside of that, there are plenty of moments that when you're going through it are tough every day. And I think you just find ways to cope, and you also leverage your team and those that are wanting to see you succeed. Got to constantly stay positive, because there's a lot of things that could bring you down, and you got to find ways to fight through.
Yeah, no, totally. And especially, you're building a community, right? So community with asset managers, wealth managers, financial advisors on. And the question I was curious is, when you build a community, you got to start somewhere, right?
Yeah.
And how do you get people to be active? Like the first people that joined Facebook or MySpace, etc. Like how these all started, even LinkedIn, right?
Yeah.
So from FLX Networks, like where do you start in terms of like building that community?
So, it's super interesting, because I think when I was launching the idea and I was sort of sharing it and putting it out there that I wanted to do this and building the MVP within that circle of close friends and acquaintances that were willing to help this idea get off the ground, we constantly heard, you're boiling the ocean, you're doing too much. It's really interesting. It could be really cool, but it sounds way too big. Do you think you can pull that off? And those words, you can't imagine how much they drive you to just prove to the point of, yes, this needs to happen and we're going to do this. And I don't care how many times you hear no, we are going to do this. And you can get on early or you can get on later. Either way, we're going to do it. And I think when you're building the community, you have to find, because that's the other thing too, in early VC, when I was talking to pre-revenue VCs that would, or I should say VCs or even PE that would look at pre-revenue startup ideas, everyone would ask, well, how are you going to build the marketplace? It's really hard to do. No one can pull it off. I use that. That was motivation, right? Because that was, well, I'm not no one. The people we're pulling together, they're not no one. These are really experienced operators. And we all have a track record of trying to win. And we have proven track records of winning. And so if you have the right people, you have the right vision, you then have to just set out, what is that cadence you're going to take? What's the sequence of events to building the marketplace on both sides? And that's that most important part in the beginning for us was attracting world-class asset managers who had investment products that they needed to find ways to grow their visibility, grow its revenue, maybe saving some money in terms of what they were doing currently, but really just find a way to help them build their business. And that was the starting point of where we had to begin. And in less than 3 years, we brought in 60 different asset managers who are members today, all of which I would say have some really impressive track records of what they do as businesses. And what's exciting is they're representing almost $3 trillion of assets on behalf of investors that they work with. Now, once that was established, you then have to go to the other side of the market, which is the advisors and the home office personnel at many of the wealth management firms. And you got to find things that you're solving for them and helping them with and begin to pull them in. And in less than about a year, we brought in over almost 60 different wealth management firms from across the industry to actually engage with these asset managers and build this community from the ground up. So there's been a sequencing. The asset managers were the most important, step one. And then obviously step two has been bringing in these advisors and the wealth management firms they work with. The step that's in between, you have to have good people at Flex. And you also need good services and solutions providers, which we've also brought in together to help make this a sticky network of connectivity.
Yeah. But I mean, the industry itself has evolved so much. I was telling one of your board members, I was actually a financial advisor many years ago, working for Ameriprise.
Yep.
And that's, that whole industry shifted, and even the asset management industry shifted, right? Where, today, if you don't manage $1 trillion in assets, like you're small.
Yes.
This is insane to think about.
It's incredible, right? I think the thing that often sticks with me, and there's two parts that we could sort of dissect there, right? You could talk about the importance of scale. You could also talk about how a financial advisor's job has evolved over the years from your days when you were at Ameriprise. And I think on the scale side, I think many times we get stuck in this belief that you have to have scale. I think what's maybe more important, because not everybody can have scale, is that you have access to scale, that you can have, as we refer to it here, synthetic scale, that you can leverage scale when your business needs it at that most opportune moment. That to me is the importance of scale. Having scale is not going to be there for everybody, but you got to have access to it. And then the other side of it, I think this is the biggest change over the past 20 years. If you're a financial advisor today in this industry, it's a different job than it was in 1999. Right? It's not just about investments. Financial advisors have more coming at them than they've ever had before. Right? There's so much that's on their plate that they have to do every day on behalf of their clients to ensure that their financial futures and their goals and what they want to achieve are being met. And it's more than just picking a stock or picking a bond or picking a mutual fund. It has truly evolved into an entire wealth management engagement. And that right there is one of the biggest reasons why asset managers and wealth managers, the engagement model that we've historically been used to, has to evolve, because it was very much based upon a sale of a product only to a financial advisor from the asset manager. And that's just not where the advisor spends all their time like they once used to.
No, I mean, I remember, hey, kid, there's a lunch from one of these wholesaler. Yeah, go listen to their products, right? Or go here, go there. You're like, I don't have time for that, right?
Yeah. Well, it's busy. I mean, technology is amazing, right? Technology is allowing this moment right here. But technology has also introduced a tremendous amount of information flow and overwhelmed almost everybody,
That's
because
right.
now it's 24/7 in your face, and it can be overwhelming to know where to begin your day and end your day. And so the key thing that you have to solve with a community or a platform like what we're doing is that you can bring time back to your members. You can help them reduce the amount of noise that they face. You can introduce more of an invitation like environment versus an interruption environment. That should be the goal of what, I mean, that is a goal of what our vision is to modernize that. But to your point, I couldn't agree more. It's how do you have, there's not enough time in day to hear every new product, every new idea. You need to find trusted resources and people to go to and platforms to go to run a better business model if you're an advisor or a wealth manager.
No, exactly. But even on the other side, as as a fund manager, where it's hard to tell your story, but it's hard to broadcast what you do well,
Yep.
especially for the middle, smaller players, right, in today's time. And it sounds like a platform like FLX Networks empowers that in a big way, empowers their storytelling.
Yeah, you're spot on, right? You can't, in a world where there's so much coming at a potential client and a prospect, doesn't matter what business candidly you're in today, you've got to find your moment where they can get your information, understand it, digest it, and potentially make that moment where you could engage them to find a way to do something with you as a client. And what I mean by that is you have to be omni-channel. You have to be perpetually visible everywhere you possibly can be, because your potential next client is not going to do they're buying the same way as the next person or the next person. People buy and consume information in a lot of different ways. And so I think you're hinting at here, if I would be that you've got to find ways as a company to make yourself visible to the buyers on their terms. And then you have to be really good when the moment comes that you can actually engage them at positioning yourself versus the competition. And it's got to be differentiated. It can't be just slightly different. You've got to have something meaningfully different in the competitive landscape that we all work in today. But it's also got to be omni-channel on how you approach it.
Yeah. And so, seeing all these change though, like let's say if I was a college student starting out and looking at this industry or entering the industry, or let's say, for example, we go backwards and you just enter the industry now, knowing what you know, like how will you do it differently? Yeah,
I
because we
think,
do have a lot of college students on here because we had a few professors on
yeah,
the podcast, and so
almost 25 years ago when I was getting into this, I think it was a different era of Wall Street. It was a different era of why you would go after the finance, the investment banking, the wealth management, even asset management. It was in some ways, some would say it was probably in its heyday of excitement around it. And I think you might hear people say, because of how hard it is today and how competitive it is and how different it is, you may hear people say it's not as exciting to them. It's different. It's a whole different industry. And I think you may hear some negative vibes at times. I personally believe that getting into this business today, if you are just coming out of school, there has never been a better time to enter an industry. This industry is at a precipice of change. And if you really want to partake in something where you leave a mark and you leave a legacy, you don't want to go into something that's already sustaining success and is going swimmingly well. You want to go after things that are in need of change, that are in need of a different viewpoint and a different direction. So if you are coming out of school, there's never been a better time to enter this business, because your ideas, your thoughts on how the world works, your ideas around and suggestions around how to change the business direction have never been more needed. And that to me should be motivation to get into this. Because I really believe this aligns with a lot where society is today too. Having meaning beyond just money is really important to a lot of employees and a lot of people that want to go start a journey in an industry.
Yeah, no, totally. And
so, I mean, actually, why do you stay? I'm actually curious. You've had an incredible career. I mean, back to you. You're interviewing really talented, amazing people all the time. What made you want to continue talking around this industry?
No, you raise a great point. I mean, I can tell you even this morning, I woke up a bit sick and I don't want to leave bed. But I was like, you know what? I'm excited to talk to Brian. This matters. Well, what's interesting is, I started my career at BlackRock.
Yep.
Right. And, growing up, I always believed the power of capital markets and finance. And it's really finance that empower growing economies, building bridges, etc. Right. Things that we need around our life, medicine, you name it, it's driven by the capital markets.
Absolutely.
And so capital markets, managed right with the right intention can do good. And
Absolutely.
I think the market itself is realizing that, where it's not about risk reward, but it's risk reward and impact. And for me, that's the message I want to continue to preach. And quite honestly, I joined a startup over 17 years ago, a 50-person startup, and we grew to where we are now. And one of the things I know is it's a tough journey. It's a tough journey to also create new paths of the future. And people don't realize is, the financial markets, capital markets that drives most of the world is actually a majority of it is running on 20-plus-year-old tech.
Absolutely.
And that's why one of the things you see is you look at venture investing, you look at like 2021, it was like 20+% venture investing went to fintech. There's a reason why. There's still a massive requirement needed to really move capital markets into the world of tech that we are today.
Yep.
And I think it's a tough movement. And so what inspired me to start this channel was, well, we know it's challenging to do it ourselves individually and even with the teams we have. Why not share our stories?
Yep.
And that was it. And that's really what inspired this podcast and inspired me to keep going and keep. It was funny. Originally, when I did this, I didn't expect to go on this long. I was like, it would have been this, a kid side project, but it kept going. Look, I have guests all the way up to January.
That's awesome.
And it's because I think it's quite important for us to do this right as a society, right? And to your point, it's not about money, but it's about having a vision, but also having a cause you want to stand by.
Totally. Absolutely.
Right.
I think it's, giving platforms to ideas and thought leadership has arguably never been more important, especially for this industry, because there is so much change happening and evolution occurring. And COVID, truly the pandemic, accelerated that changing environment, as we all know. I think one of the things that I found interesting is that if you actually look at the data, 9 out of every $10 in mutual funds and ETFs and go to 25 companies within asset management. 9 out of $10 in the separately managed account space within the wealth management platforms go to about almost 10 companies, a little bit over. 9 out of $10 in interval funds and go to 25 companies. And if you look at that, it's not that I'm suggesting that they shouldn't go to those companies. Those companies are world leaders, great brands, and they built something that's reliable to me as an investor that, candidly, I want to own their products too. However, I think the great thing about finance and entrepreneurship is that there's always ideas that need to be explored, and there's always pathways to new profitable ventures that need to be explored. So that 10% that remains needs to have the ability to stand out and also compete on a global scale, on an omni-channel scale, more than ever before. But it doesn't mean, by the way, that that I would be anti the big company. The big brands are super important. We need them. They are too much of an importance to the industry and also just general day-to-day investing. But I do think, one of the things you can bring forward with this marketplace and this environment, especially what we're doing, is you can bring forward a market that can compete effectively together.
No, but you also raise a good point. If I assimilate this to like, startups, right, and or tech startups, where look at 20 years ago to start a tech business is very expensive, but today you open an Amazon Cloud account or Google Cloud, you don't need massive capital, right? But yet when you say I want to launch a fund or I want to, hey, I'm very good at stock picking
Yep.
and I'm ready to go, it's still very expensive to launch and get noticed in today's market because it doesn't exist platforms like Flex Networks that empowers that, right?
Yeah. Well, I think in some ways, from a tech company perspective, I think you would agree. It depends on what you're trying to achieve, right? If you're trying to build a vision that is super bold and is going to change how the entire world or an entire segment of industry changes what they do, it could be expensive and you may need a lot of capital to pull it off. But initially, you need the know-how and the MVP to get the vision rolling. On the mutual fund or the ETF or really any of the registered product sides, it used to be 20 years ago, if you just launched the product and you had a laptop and a phone and you just had the gift of gab, you might be able to get the business up and running off of a meaningful investment into the business, but you could get it off the ground and get it going relatively seamlessly. Today, not the case at all. If in one, it costs a lot of money to launch a product.
Yeah.
I shouldn't say there's an investment that you have to make to launch a registered product. Then it's more than just a laptop. It's more than just a phone, right? You need to find all the tools that are going to allow you to be viewed as a legitimate company and a business that in a world that is heavily fiduciarily driven, that they can invest with you. And so those other components beyond the operational, the mid office and the back office, have become increasingly important.
Yeah. And I guess in a way, do you see the industry continue to consolidate further, or you think there's an opportunity to really pause on consolidation? To your point where 90 cents out of the dollar goes to the top, 2024. And, we see massive consolidations over the last, decade or two.
Yeah.
Like, what's your view on that?
I think consolidation is just, it happens in every industry at some point in time. It's been happening here this isn't a new topic. This has been around for years, right? So I do think it continues. I think the economics behind it are going to continue to drive the need for consolidation. I don't necessarily look at consolidation as a bad thing as well. I think consolidation can allow for a lot of great ideas and great business leaders to just get a bigger platform to leverage and scale with. Right. So I think it continues. It's inevitable in some cases due to the market pressures around it. But I do think it's also can be viewed as a positive too.
Yeah. And then what is your view around this whole passive versus active movement? I know in the last 2 decades we've got, if anything, like a super passive bull market. Like you think that's going to be the continued trend going forward?
No, it's interesting. Since the GFC, you basically have had an environment where you've had low interest rates for the most part until recently. You've had fairly low volatility, and much of you, if you were doing attribution analysis at a higher level, I think it could be argued that much of the return in investment products or portfolios of investment products has come more from the allocation of the sectors and or the asset class than the actual individual stocks themselves in some cases. And I think active management is obviously, we've seen that in the flows into passive over the past decade. And we've seen that in a lot of the headlines across media. I think what you're now, you're potentially in the position of seeing though, is rates are normalizing to a higher level. Who knows exactly where that final point is, but they are increasing and they've increased more in this year than really any year as we all know, in the past 30, 40 years. Separately, you're starting to see volatility creep back into the market. And they're not just short bursts of volatility like you saw in that March to May period of 2020. Volatility is here. And so with a higher interest rate, more volatility in the market, there is the opportunity for strong stock selection to once again make a difference. I do think it's important that you have active management as a component, a meaningful component of investor portfolios, because it gives the investor, in my opinion, another tool to actually outperform the broader marketplace. And sure, passive has done well for the past decade plus, and then continues to do well in inflows. I will always believe that I want to have as many tools as possible in my kit to outperform and meet my financial goals. And active management should be able to provide that with the right organization, the right team, the right process. And I think that's set up for a really interesting period as we move forward.
Yeah. No, I think that makes a lot of sense. So usually what we do in the wrap up is really asking the question to the wider audience, from you, which is, how can the audience help you, and what type of connections do you need that will help Flex Networks and your continued success?
It's simple. Participate. Right? Join Flex Networks. If you're in the financial services industry and you're an asset manager employee, or you're an employee at a wealth management firm, or you work for a large RIA, or you're a financial advisor at one of these firms, join us. It's free. We have a community that's growing, and we want your feedback. We want to create something that helps you put time back in your day, save you money, and hopefully grows your business. Right? It doesn't matter if you're an asset manager or a wealth manager. Come be a part of something that's trying to change how we take on day-to-day business. And I think that's a pretty fun journey to be a part of and impact, because we want your advice and we want your guidance as part of the membership. That's a pretty simple ask, and it doesn't cost anything.
That's right. That's right. And we do have quite a bit of financial advisors that actually watch this as well. So as always, Brian, thank you so much. That was brilliant. I'm definitely super bullish. No, definitely. I'm very bullish on what you're doing. I think it makes all the sense in the world. And wish you continued success.
Thanks, Kit. It was great to be on the show. I appreciate you having me, and look forward to talking to you soon.
Thank you. And then for the wider audience, as always, I just want to say thank you for your continued support. It is your support, your private messages to me, all that stuff that really keeps this conversation going. And so thank you. Next week, I will be on with Philippe Pagnotta and Antoine Grace from ShiftFix. So Antoine and Philippe and I will talk about their perspective and respective entrepreneurship journey, but more importantly, how they are looking to build a data community around the shipping industry with ShiftFix. So that's also going to be a very interesting conversation, similar to today with Brian. So thank you, everyone. And again, happy Veterans Day. We'll meet next week. Bye-bye.
Thanks, Kit. Take care.